Member for Wellington-Halton Hills North.
Mr. Speaker, a recession can be defined as 2 consecutive quarters of flat or negative GDP growth. By that definition, Canada is in a recession. The government has downplayed the seriousness of these 2 consecutive flat to negative quarters of growth and painted a picture of an economy with underlying strength. But that fails to take into account the bigger picture. And here is the bigger picture. In 3 of the last 4 quarters, aggregate GDP shrunk. And that comes on the heels of years of shrinking per capita GDP. Per capita GDP is a more important measure than aggregate GDP. Here's why. Decades from now, it would be far better to live in a country of 40 million Canadians making double what they make now than to live in a country with 100 million Canadians making the same as they make now. The first country would have a smaller economy than the latter, but it would be more cohesive, more prosperous, and more environmentally sustainable with higher levels of individual income. Many corporate CEOs would prefer the latter country because the total accessible market would be larger, but the average Canadian would be poorer for it. Looking at the last 3 years, the picture on per capita GDP is grim. Canada was effectively in a per capita recession in 2023 and 2024. In 2022, per capita GDP stood at $60,735. In 2023, it shrunk $458. In 2024, it shrunk yet again, $539. So, over a 2-year period, per capita GDP dropped by almost $1,000 per person, a drop of about 1.6%. And looking at the last 6 years, the picture is not much better. Before the pandemic began, per capita GDP stood at $59,681 in 2019. Last year, it stood at $60,073, an increase of only $392 over 6 years. This is a compound annual growth rate of 0.1% per year, effectively zero. All the while, the cost of living skyrocketed. And the picture is just as bad when we look at last year. While per capita GDP edged up slightly in the last quarter of 2020, in the last quarter, the first quarter of 2026, by 0.2%, quarter over quarter, the fact is per capita GDP shrunk in Q2 and Q4 last year. As a result, per capita GDP last quarter was up only 0.2% year over year, effectively zero. In other words, per capita GDP under the first year of this new Liberal government follows the same trajectory as it had under the old Liberal government. Part of the bigger picture is not only declining GDP, but productivity. As a Nobel Prize-winning economist once said, quote, "Productivity isn't everything, but in the long run, it's almost everything. A country's ability to improve its standard of living over time depends almost entirely on its ability to raise its output per worker." The picture on productivity looks grim. When we look at StatsCan's annual measures, labor productivity has declined in each and every one of the last 4 years for which we have full year data. Productivity dropped from $67.70 an hour worked in 2020 to $63.20 in 2024, a decline of almost 7%. 2 years ago, on March 26, 2024, Senior Deputy Governor of the Bank of Canada, Carolyn Rogers, called Canada's lagging productivity an emergency. Since then, productivity appears to have flatlined, if not declined. The emergency appears to have become even more dire. When we look at StatsCan's quarterly measures, business sector labor productivity declined over the last year. In the first quarter of 2025, it measured on an index of 100 at 104.7. Last quarter, it stood at 104.074, a decline of 0.5% in just 1 year. Under this new Liberal government, the productivity emergency has gotten worse than it was under the old Liberal government. Mr. Speaker, at this point, I'll just remind the House that I'll be splitting my time with another member. When the Bank of Canada rang the alarm bells on productivity, it cited low levels of business investment as one of the root causes. Business investment has plummeted over the past decade. According to a recent analysis by Stephen Globerman of the Fraser Institute, business investment in plant capital, equipment, and IP, expressed as a percentage of GDP, dropped from 13.8% in 2014 to 11.1% last year. And under this new Liberal government, the decline has continued. According to StatsCan's release of May 29th, I quote, "Business capital investment fell 0.7% in the first quarter of 2026, the fifth consecutive quarterly decline." Stephen Globerman has called this a, quote, "business investment emergency." So we have not only a productivity emergency, we have a business investment emergency. The word emergency is not my word. This is the word of the Bank of Canada and of a reputable research organization. The fundamentals have not gotten better in the past 12 months under this new Liberal government. Not on per capita GDP, not on productivity growth, not on business capital investment. In fact, in many cases, it has gotten worse. The data I cite in this speech is taken from Statistics Canada, including tables 36-10-0706-01, table 36-10-0480-01, and table 36-10-0206-01, unless I've specified otherwise. Mr. Speaker, in my assessment, nothing this new Liberal government has done with this new Prime Minister in the past year fundamentally changes the trajectory of the economy. And the early data that's come in over the past 4 quarters confirms that assessment. Canada's per capita GDP continues to flatline, if not decline. Canada's productivity continues to flatline, if not decline. And Canada's business capital investment continues to flatline, if not outright decline. That's because the government has failed to introduce the fundamental reforms necessary to turn the economy around. They have failed to introduce wholesale tax reform to our personal and corporate income tax systems. We need tax reform of the scale and ambition that we saw in 1971 or that we saw in the 1980s under the government of Brian Mulroney. They have failed to introduce fiscal reform of the scale and ambition of Prime Minister Chrétien and Finance Minister Martin, who introduced in 1995 a revolutionary budget that refocused the federal government and balanced the budget in 36 months. They have failed to introduce desperately needed competition reform to address the oligopolies and uncompetitiveness of our economy that are making our goods unattractive for export to global markets. Exports expressed as a percent of our GDP have plummeted from about 43% of GDP in the year 2000 to about 33% today. And they have failed to introduce the regulatory reform needed. We need to reduce the regulation that is strangling business investment and growth. The government implicitly acknowledged that their regulatory approach isn't working. Not only have they not used the national interest designation under Bill C-5, the government is engaged in yet more consultations to introduce yet more legislation to change their regulatory approach. Until early April, the government could argue that it didn't have the power to enact these fundamental reforms because it didn't have a majority. That excuse no longer holds. The early data coming in over the past 12 months is that the new Liberal government is on the same course as the old Liberal government on per capita GDP, on productivity, on business capital investment. The government has a choice to acknowledge how bad things are, reverse course, and introduce fundamental reforms in taxation, competition, regulatory, and fiscal policies, or to continue to preside over Canada's continued economic decline. If the government doesn't acknowledge the very real and serious fundamental challenges our economy is facing, they won't fix the problem.
Questions and comments.